a very big risk, does it? But all of you are worried about the stock market. If you're worried about the stock market, you can be. And we'll get to terrorism in a bit. But that means you're forecasting. Now, a lot of fancy universities have done, am I getting a little too esoteric?
No.
Okay. A lot of fancy universities have cataloged every conceivable method of forecasting. Budgeting, forecasting, linear regressions, every conceivable way. No one ever forecasts in the 5-year range in a large group of forecasts correctly. The only probability you have of forecasting correctly is to never turn on the TV, go away to Mars, forget what's going on in the world, believe in America, and understand historical returns, and either you believe that America is going to survive or you believe it's not. Because you can't make a forecast every 6 months and every year. There wouldn't be such a thing as an economist if they knew how to get rich. Nobody would be busy writing economic forecasts if they didn't have to make a living. And etc. Now, to go a little bit deeper, and I'll go quickly on this, there are really a few things you have to know about the market. Market, sector, industry, and company. Again, want to make your life simple. Market, sector, industry, and company. There's this huge world. There's this huge market. If you're lucky, there are 10 sectors. And if you're lucky, there are 55 industries. But there's 40,000 companies. And in each and every case, most of those industries are dominated by a handful. So if you want to speculate and concentrate your investments, let me tell you how to do it. In almost all periods of time, technology, financial, and healthcare stocks have outperformed the market. In some short time frames, they do not. But on average, technology, financial, and healthcare. But what else are we? We're energy, but that's a mature few companies. We're Procter & Gamble and Coca-Cola and food, but those are a few mature companies. We're a few cyclical commodity companies, but they may do well, but they're not going anywhere. But technology and healthcare and the financial industries, that's your market. Your banks, your drug companies, your various kinds of technology companies. There is no other market. 60% of the NASDAQ is technology. So when you read small companies give a higher return than larger companies, technology is a very good area to invest in, and technology is what dominates the NASDAQ. Doesn't take a genius. Technology, the market goes up. Not every single year, but it tends to go up. Gross national product grows, the economy grows, the world grows. Health, financial, technology. You know, Home Depot is a great stock. I bought a lot of shares when he was here. Still have it. Market did just as well. He could have been wrong. You didn't need Home Depot. All you had to do was buy the SPY, which is a thing we'll talk about in a minute. Now, let's say you want to get rich. So you take these few things I just told you, and you use leverage. You borrow on margin. You buy the market, you buy on margin. If you guessed at the wrong time, you'll probably get wiped out. But if you have backup, strength, and money, you buy the market, you buy it on margin, you'll come out outperforming everyone else. Because remember that not one of you here, and and I'm venturing to say this, and this is not where this fits in, has ever seen the record of a portfolio manager? Ralph? Have you? You've seen their clients' records. It's easy to take other people's money and say, I like this, I like that, I like this, I like that, put it all together, we all know how to do it. Oh boy, we charge 1%, we get 20%, we make a lot of money, we're all rich. But did you do it with your own money? No one wants to clean that mess up. All they got to do to make it a viable system for all of you is say you want to invest other people's money, invest yours the same way. And show us your record of yours. You like these stocks? You own them for yourself. How could they be good for a person with the same income, the same number of children, the same outlook, the same profile, but they're not good for you? It's impossible. Well, because they're a business. Do lawyers, there may be some here, do lawyers report the number of cases they've won and what the specifics of that case was? No. But there's a lot of rhetoric. No one wants to be judged. You know, the money management business is the only industry practically, except for large corporations, that are judged in any way. The records are available. And just think about this for a second. Unfortunately, for a very positive person, this is a very negative statement. Every major investment company in America today runs mutual funds. How could it be that they all do so poorly? And how could it be that all the investment firms, how could it be with unlimited resources to buy so-called research, can't outperform the market in any continual way in large groups over periods of time? What value does research have? The facts would suggest very little. Short-term fluctuations of stocks are wider, and short-term fluctuations of stocks are what people are afraid of. No one, very few people are risk-averse. You cannot market time. If you think you can market time, you waste your time and your money and your energy. It's a fine way to keep your mind active. And it's a fine way to play a game of trying to get rich. But remember, the return of the market is the return of everyone's money. And that's exactly what the return of this room is, if we're lucky. We're a smart group, I guarantee you. Somebody mentioned, Howard, you mentioned, he bought a couple thousand shares of some stock. Now, Howard, we all know, is a wealthy man. Did that mean anything? Did his wealth change? No. Because the only way it would have changed if he was measuring his performance on his total portfolio against a perceived goal and objective that he was measuring it against. The fact that he won on some particular stock has no effect in his total effectiveness as a money manager of his portfolio. And mine. And Ralph's. Because we all three of us bought it. Next point. Am I boring you yet? No. You're sure? This is really important. This is really, really important. I made a speech a while ago about optimism and pessimism. It would have been easy to come here when the market was crashing down and talk to you about pessimism. Oh my gosh, pessimism always goes to the extremes. This is a good time to buy. Never get too pessimistic, because I got the same spiel for 40 years. Never get too pessimistic, it doesn't work. Most of the pessimism, by the way, comes about from liquidation of margin. Most of the pessimism comes about from liquidation of margin. Margin went down from almost 300 billion down to 120 billion or so, and now it's back to about 180 billion and going up very quickly. So margin is on its way up. So the seeds of the next decline in the market, short term, whatever period of time it will last, which will be short, are building. I don't think we're there yet by a long shot, but that is building. So we are now out of the greatest degree of pessimism into a much improved environment of optimism, but there's still a huge amount of caution and fear. So if you just try to sense, as a select group of people, where this optimism is.